Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. It is February 22nd. Can't believe we're already almost wrapping up the second month of the year on into March. We are about to go. Today we're going to take a look at one out of the consumer discretionary sector, Domino's Pizza. Let's jump right in. And if you are new to the channel or would just like to help me out, hit that thumbs up button down below if you find any value in the content, or if you are a dividend growth investor, hit the subscribe button. So join us on this journey to financial freedom. Join the vested interest community. And don't forget to ring that notification bell down below so you're notified whenever we put out any new content. Doing all that really does help out a small YouTube channel like me grow with the YouTube algorithm. Helps to get the word out, and trying to get to 1,000 subscribers, and I'm only going to get there with your help. So really do appreciate that. Now, this is the vested interest stock screener. This is how I set up the videos, how we're going to go through the videos, and how I look at a stock on a high level. Also, how I look at stocks that are in my portfolio and still see if they meet the investing criteria that I've set up. You can pause this and go through it. And I don't just blindly copy my screener. We all have different time frames. We all have different investing criteria and investing goals. So make sure that you are picking your own criteria. This can give you some ideas. If you want to, pick a couple out of here, great. Just make sure you're tweaking it for your investing style. Now back to the video. We are talking about Domino's Pizza, and if you want to know more about this company, and you should, if you're an individual investor picking out individual stocks, you should know how a company makes its money and makes its revenue, what products they or services they are selling. So check them out at biz.dominos.com. That is their homepage where I pulled this information from. That is biz.dominos.com. That is their homepage. Entrepreneurial spirit. Domino started out small with just one store in Ypsilanti, Michigan, and that is how you say it. I do live in Michigan. I love it whenever we cover a company from my home state. I wasn't born here. I was actually born in Wisconsin, but this is where I grew up most of my life. I did spend some time out in Utah, down in Texas and Georgia, overseas a couple of places as well. But back to the video. Ypsilanti, Michigan in 1960. Fast forward more than 60 years, and Domino's has grown to become one of the most recognized and leading pizza brands in the world. Here's a brief look at Domino's throughout the years. And if you go to their homepage, it will give you a timeline like every 4 or 5 years. I just fast forward and clipped out 2021 and 2022. Domino's launched a 2-minute car side guarantee. Order Domino's car side delivery online. Check in when you arrive, and as soon as your order is ready, Domino's team member will head to your car in less than 2 minutes. I think that is nice. I don't have to get out of my car. They'll bring it right out to me. And in 2022, Domino's electrified pizza delivery by announcing the rollout of more than 800 custom branded 2023 Chevy Bolts. And if I've never mentioned it, my wife is an executive with the General Motors. I actually worked for General Motors for a couple of years. I had some involvement in demoing out a plant that they are building a lot of the electric vehicles in. I've been in the plant where they build the Chevy Bolt, and I've also been in several of their battery plants, helped set up one down in Ohio, the Ultium battery plant down there. So this one has a bit of a special place in my heart. 2023 Chevy Bolt electric vehicles across select stores in the U.S., making it the largest electric pizza delivery fleets in the country. So I like that they were buying Chevys and supporting me and my wife a little bit. Again, biz.dominos.com. Go check them out at their homepage if you want to know more about this company. And we are looking at them because they were down 2.78% on the day, dropped $12.78, did close out the day at $446.22. We are talking about Domino's Pizza Incorporated, ticker DPZ, out of the consumer discretionary sector. 52-week range as low as $285.84, as high as $476.18. So they are closer to their 52-week high than their 52-week low. Average volume 564,000. Today was 902. Just a sell-off throughout the whole day. Nice big drop in the morning and a bit more of a sell-off around 10, and just continued to go throughout the day, right? Just a sell-off throughout the day, 2.78% down. Market cap of $15.53 billion. A beta of 0.84, so they are less volatile than the overall market. PE ratio for me, this type of company, this seems high. $30.47 per share for a price to earnings ratio seems a bit high. This is more in line with a fast-growing tech company. I don't know that Domino's Pizza is growing that fast, but then again, you never know. Earnings per share, EPS, is sitting at $14.64 per share. That's actually very high. I like that. Forward dividend is $6.04 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. Dividend yield is low though, 1.32% starting dividend yield, ex-dividend date March 14th. So it says 12/29, so that must have been the last one. They'll probably pay out in, I believe if their ex-dividend date is going to be in March, they'll pay out in March. We'll see that here in a minute also. And a one-year target, at least according to Yahoo Finance, $463.72. So they see it going back up and setting a new 52, no, not quite back to its 52-week high. Back up to 463. It dropped down from 460 all the way to 446. That's the drop, $12.78. All right. Yeah, that's a big drop, 460 down to 440. Now we're going to take a look at dividend yield theory to see if this one is presenting any undervaluation. To do that, we look at the 5-year dividend yield average of 0.97. We compare it to its current 1.32 over here where it says forward. And to find this, if you went to Yahoo Finance, that's where I pulled all this information from. It's not clipped here, but over to the left-hand side of this, you'd see, a bunch of information. Balance sheet, income statement, statistics, financials. You'd click on the statistics tab. That would take you to this link. You'd go down to dividends and splits. You'd look at a 5-year dividend yield average, 0.97, and you compare it to its current 1.32. And because the dividend yield currently is higher than their 5-year average, that speaks to undervaluation. If this number was lower, that would speak to overvaluation. They are inversely correlated. Low payout ratio on this one as well, 33.02%. I like anything under 75%, so this is much lower than I like. Anything under 50% is really good. So this is a nice low payout ratio. Now we're going to get, again, if you were to go over here to the left, you'd click on financials. That would take you into a couple different spots. You could check out their balance sheet, their income statement, their debt to equity ratios, their margins. You could look at, are they paying down debt? Are they repurchasing stocks? We're going to look at the repurchase of stocks, and we're going to look at free cash flow. Typically, if a company has free cash flow, they have growing dividends. Dividends are paid out of free cash flow. That's where it comes from. Going back to 2021, there was $560 million. 2022, $388 million in free cash flow. Bit of a dip there. 2023 back up to $485 million, and so far haven't really recorded anything for 2024. So I would say a bit of a drop in 2022, back in line, but overall from 2021 to 2023, there is a bit of a drop here. Now, they are repurchasing their shares, but that has slowed down as well. If you see back here in 2021, they were over 1 million shares repurchased, down to 293,000 and 269,000 in 2023. So they are repurchasing their own shares, not as aggressively as they were in 2021. Now, you might have had a big jump up here in 2021 because of the COVID-19 stuff, the COVID stuff, and a lot of people staying home. So that may have contributed. Now that we're back in 2022 and 2023, things back open, relatively normal. Maybe people aren't ordering as many pizzas as they were in 2021. That could be the reason for that. Now, I always recommend more than one source, so another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure you're picking more than one so you can check the information you're getting is accurate and up to date. Now, the 28 analysts that have taken a look at this, they call it a consensus buy. They have a low estimate of $330, which would be very nice. That would probably put it in the 2% dividend yield range, which would be a much better starting dividend yield. $330 low, which would be a 25.9% decrease from where it currently sits. Even their average estimate is lower than where they currently sit at $437.36, which would be a 1.79% decrease, and only if it hit their estimated high of $535, which would be a 20.13% increase, would you see an increase in the share price on this one. So if you were to buy them now, very low starting dividend yield, I would really look for them much closer to this 330 low, somewhere maybe in between this average of 437 to 330 if you're interested in a company like this. Now, again, I'm going to get into statistics and look at financial efficiency. To do that, we're going to look at return on equity and return on invested capital. I like 10% or better for both of these metrics. Now, this return on equity, I do not like at negative 12.6%. It's really the only negative I see on this one other than the valuation. It's overpriced in my opinion. It really needs to get, I would like it back under $400, even $375 would be closer and more in line with what I would look at, at $330. Let's finish this up, and I can even tell you what it would be in 15% of its 52-week low here in a minute. But return on invested return on equity, negative 12.60. I don't like that. Return on invested capital is very nice at 57.25%. That's very high return on invested capital, so good numbers there. So that's a mixed bag for me on those. Now, EPS growth is another one that I like to look at. Very fast EPS growth, sitting at 10.27%. That's extremely high. I like 5% or better, so that's twice what I'm looking for. And revenue growth forecast sitting at 4.46%. Even that is pretty nice there. And where it sits at 15% of its 52-week low, let's say this 330. What did we see there? 330 times 1.15. So 379 would put it within 15% of this 330 low estimate that they have right here. So I would want it under 370, preferably under 350, heck, preferably under 330, but I don't know that it'll get there. But let's look at the dividend payout ratio again. They've got it at 41.34%. So again, that's why I like to look at more than one source. I think Yahoo Finance had it down in the 30s. So still under 50%, very low with a very high dividend growth rate, 13.97%. We went back to 2021, and their payout, let's look at their payout, was March, June. So yeah, mid-March is their dividend record date, ex-dividend date, and then they're going to pay out in March, June, September, December timeframe as well. Going back to 2021, paying 94 cents per share. March 2022 jumped it up to $1.10. March 14th, 2023, up to $1.21. And in March, $1.51, they're going to jump it up from $1.21 to $1.51, their next payout here in March 2024. So overall, low payout ratio, high dividend growth, needs to pull back more, in my opinion. Under 370 would be where I'd maybe consider starting a position on this one. I'd really like it under 350. But let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up or ring the notification bell. Most importantly, subscribe to the channel. Let me know what you think down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like Domino's Pizza you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down there and I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You never invest any amount you're comfortable losing. Always do your own research. Invest in your situation, circumstances, and select criteria, or seek the advice, counsel, or certified financial advisor.